Good morning, everyone. Welcome to Daily Rates Live with the Mortgage Calculator. Today, we are going to be going through our live rates, and then we're going to be talking about second mortgages or HELOANs. Give us just a moment here to go live on all the different platforms. We appreciate everybody tuning in nice and early. Definitely a great topic here for today to go over. All right, it looks like we're live on all the platforms, so we'll go ahead and get it started here. What we'll do is we'll take the chat off the screen for now, but go ahead and keep dropping comments there in the chat. You can also drop any questions you have in the chat. We'd be more than happy to answer them after the presentation. All right, welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our CSO, Jose Gonzalez. We are a lender that specializes in non-QM loans, and what we do every weekday at 11 a.m. Eastern on this show is go through our actual live mortgage rates for a few programs. Then we do a deep dive into a different loan type, and today's loan type is going to be second mortgages or HELOANs. So I'll go ahead and pass it over to Nick to go through the rates, and then Jose will talk about some second mortgage programs. So, Nick, if you're ready, let's go ahead and check out today's rates.
Alrighty. We will pull up today's rates for October 10th, just after 11 a.m. Eastern. So all the initial rate sheets here are live. We'll set up a standard scenario to compare the APR across the program. If you'd like a breakdown of all the fees, the itemized loan estimate, please get with one of our team members. They'd be happy to help you out. For our demo, we always set up a standard scenario, single family home, $500,000 purchase, $400,000 loan amount. That corresponds to 80% loan to value, 20% down payment. Use an estimated 760 FICO credit score and an estimated 40% debt to income ratio. So let's make the rates nice and big here. And first up is, click the wrong button. Sorry. First up is our 30-year fixed conventional for a primary home. Rates today come in at 6.124, final APR 6.439. And if for any reason our customer doesn't qualify for a conventional option, we typically want to compare an FHA option. FHA allows more leniency on credit issues and a higher overall debt to income ratio, but does require upfront and yearly mortgage insurance. FHA comes in today, 5.25 rate, final APR with all the fees and mortgage insurance, 6.205. And if our customer qualifies for both, they may consider FHA. It could be a touch cheaper if they're willing to do the mortgage insurance. And our customers that need to use it, definitely very comparable option. VA is only for eligible vets and active service members. For those that are eligible, these programs are amazing. 5.5 rate today. Final APR with a standard funding fee, 5.798. And if we compare that to FHA and conventional, the VA is definitely going to be the best option for eligible borrowers. And the final standard option here, USDA. Those are for properties in USDA eligible areas. Those are the rural areas of the country. If our property is eligible and our borrower is eligible, these are great options to consider. Rates come in today at 5.375. All the fees included, APR comes in at 6.125, which beats FHA by just a touch if our customer is comparing, and beats conventional by just a touch for our customer that might be comparing. So good option for those rural areas. And that rounds out our standard options. Next comes our non-QM alt-doc options. So many other banks or lenders do not have these options that we have and would have to deny the customer. Fortunately, we have alternatives where the customer doesn't qualify with tax returns and standard documents needed for conventional FHA, etc. They can switch to using alternative documentation like bank statements, 1099s, P&L statements, all kinds of different options. We have over 5,000 variations. Rates come in today, 6.125, final APR 6.450, almost identical to conventional today, which is pretty amazing. And the investment property option for non-QM, again, bank statement or similar, comes in today, 6.999, final APR 7.415. And we'll compare those with our other investment property options. So first up, our conventional here. There are no government options, so no USDA, FHA, or VA. But conventional comes in today, 6.875 rate, final APR 7.211, beating alt-doc by a touch, but not beating our DSCR, our favorite option. DSCR stands for debt service coverage ratio. We don't need any income information or employment information from our borrowers, so great options for our investors. Simply use the estimated rents to compare to the estimated expenses. If the estimated rents cover the estimated expenses, aka the property cash flows, that's a ratio of 1 or higher. And this option here is our most common option with a 3-year prepayment penalty. Comes in today 6.375 rate. Final APR 6.682, beating conventional by quite a bit. And we can sweeten it up a little bit with a 5-year prepayment penalty. Rates today come in at 6.25, final APR 6.553. And the final DSCR option is a no prepayment penalty option to check out. Rates come in today at 7. Final APR is 7.311, so just a touch higher than conventional. I'd still say 100% of investors would prefer this to conventional if they do not want a prepayment penalty, as DSCR loans are preferred by most. And our final two things we go over today are actually our topic for today, our 30-year fixed second mortgages. So these are for our customers that may have lower rates than what you see here for all the other programs for their first mortgage, still want to access their equity in their home, still want to get some cash out, but don't want to touch that first mortgage. And these are alternatives to HELOCs, which would typically be the most common option. So instead of a HELOC, we can get a 30-year fixed. It's not adjustable, it's fixed. And much lower rates than a HELOC. For a primary home, we can get rates as low as 8%. Final APR 8.370. And for our investors, we can get rates as low as 9.375. Final APR 9.731. And HELOCs are very rare for investors. This is a great option. But let's have Jose break this down a little bit further, as these general price quotes often don't do a special program like this justice, where we can go through all the specific examples. So, Jose, let's check out some second mortgage options.
Good morning, everybody. Thank you for joining us for Daily Mortgage Rates Live with the Mortgage Calculator. HELOANs are fixed rate, closed end second mortgages, as opposed to a HELOC, which is an open-ended second mortgage. Could be variable rate or could be fixed rate. We do have fixed rate HELOCs. The difference is that the HELOC is open-end, so you pay interest on what you owe, versus the HELOAN, which is a closed-end mortgage and has a fixed amortization and a fixed amortization table as well. Now, the other really big advantage of the HELOANs versus the HELOCs is the multiple income streams that we can use. We can use traditional full doc. We can also use alt doc, like bank statements, profit and loss reports, and 1099s. And we can also use DR, which is pretty amazing as well. So let's get into our options today on our fixed rate HELOANs. First option here we have is at the maximum LTV or maximum CLTV, of 90% combined loan to value. When we're talking second mortgages, is the LTV when you combine the loan amount for the first and the loan amount for the second, divide that by value, and there you have your combined loan to value. So in our full doc option here for our refi, 10.375 is our lowest cost option at par, and you can buy that down to 9.625. And this is for a straight out finance. Now, we do have piggyback loan transactions that are possible. So I do have one example here of a piggyback transaction, which is basically a combo loan. When you're purchasing a property, you have a first loan for X amount, second mortgage for Y amount, and usually different reasons why you may do that. Mortgage insurance, combo loan on a condo in Florida, right, where you're trying to get maximum CLTV of 90%. So here, 10.375 is our lowest cost option at par, and you can buy that down to 9.625 at a cost of 2.125 points for our combo loan. Now back to the cash out refi options. Now, this is for a primary cash out refi, 85% CLTV, because this is a bank statement option. So 85% CLTV is the max CLTV on that. You're looking at 10.375 is our lowest cost option at par, and you can buy that down to 9.625 at a cost of 2.125 points. And now for our DSCR option, maximum 70% LTV for this option. The DSCR option does allow adding a prepayment penalty to it. 11.875 lowest cost option and 11.75 lowest rate option at the maximum 70% CLTV. You'll probably get a few more options if you drop the CLTV a little bit, but this is our maximum CLTV. And now a cash out option using profit and loss for an investment property. We are able to go to 75% CLTV for this. 11.5% is our lowest cost option, and you can buy that down all the way to 10.625%. And our last option here is using 1099. So we have run the whole continuum here from full doc, DSCR, P&L, bank statement, and now 1099. This one for an investment property. 75% CLTV max on this one as well. 9.75 lowest cost option, actually with a little bit of a lender credit. And you can buy that one down all the way to 9.375 at a cost of 1 point for your 1099 HELOAN investment cash out refi. So definitely look to the mortgage calculator for all of your second mortgage HELOAN and HELOC options.
All right. Thank you, Jose. I don't see any questions here, so I think we'll go ahead and wrap it up. Remember that we do this show at 11 a.m. Eastern every weekday, where we go through our live rates and then do a deep dive into a new topic. So we'll see you all tomorrow with a new topic to talk about at 11 a.m. Eastern.